Well, August CPI report showed that inflation rose at an annual pace of 3.7%, up from last month's 3.2%. Now, the shelter index also saw an increase over the last month. Here to explain is Yahoo Finance housing reporter Chen. So, Rebecca, what are you watching?
Yes, so we are seeing that prices are still growing, even though they are slowing down compared to what we've saw in the last couple of years. This morning's CPI numbers show us that the shelter index of inflation within the overall CPI inflation is about 0.3% in August, and that equates to about a 7.3 year-to-year change. So right off the bat, we can tell that this decline, there's a decline in how fast prices are growing, but if we compare to last month, which we saw a 0.4 monthly inflation, and last month was also had a 7.7% annual increase. So we're already seeing that shelter inflation is growing slowly, and experts that we talked to have said that they think we have reached the peak of shelter inflation. But this is still a good news, bad news sort of thing. Prices are still fairly high. Just to give you a little bit of context, CPI for housing has grew for 40 consecutive months in the past 40 months. And historically, the shelter inflation has been about 2.8%. So that being said, we are still seeing a fairly high housing cost in the US right now. And when we really look at rent inflation, what is interesting is that rent inflation has actually increased slightly to about 0.5% this month. So underground, what we have been seeing is that rent reached about $2,052 in August, according to Redfin. And this is only $2 less than the record high that we saw last August. So you can still see that rent is climbing at a rate that most renters wouldn't want to see. So, what we're really seeing from this morning's inflation number is that, yes, inflation has really slowed this month, but prices are still growing, and it is very sticky for the Fed to really fight the housing inflation given the low inventory that we've seen in the market.
So, Rebecca, give us some context then. How are high mortgage rates and inventory impacting inflation data?
So that's a great question. And it all comes down to high interest rate and inventory. Because the rate has been low for so long, the homeowners who right now are in a house where they locked in about a 3 to 5% mortgage rate, they really don't want to sell, because if they sell and they have to, buy their next place, they're going to have to go into a mortgage loan that is double of what they're currently paying in terms of borrowing costs. So we are seeing a record low number of inventory on the market right now. And what that is doing is, because there's so low inventory, demand continues to outpace supply. And that is pushing prices, that is keeping prices at a very elevated rate. And what that has been doing is just inflation is not coming down. The Fed is fighting inflation with higher mortgage rate, but higher mortgage rate is keeping the inventory low. So we're really in this a little bit of a dilemma for the Fed. But the good news is that we did see apartment construction, the number of apartment construction increase in July by about 16% compared to last year. And what that could do for the future is, as more constructions are on the market, the rent might come down and lowering that inflation a little bit for consumers.
Well, hopefully some relief ahead then for renters. I know they've had a tough time so far this year. Appreciate you joining us, our very own Chen.